of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
TFNN, welcome to the January 9th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And, of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 140 points. 23,925 is the print. S&P's up 15. NASDAQ 100 up 58. It is green across the board. All the indices to the upside until we get to that spot volatility index. That's trading down 48 cents, 2.75%, 19.99. A Kmart blue light special out there, but price looks like it is headed lower. If it heads lower, where does the S&P head? That's right, higher. We've got gold trading up $6, silver 0.002. That means flat when you take a look at silver. Light sweet crude up 220. Leading the charge dollar-wise to the upside. Intuitive Surgical up $32, over 6%. ABIO Med up $19, 6% as well. AutoZone up nearly 15, almost 2%. Mettler Toledo up 12, a little over 2%. To the downside, Constellation Energy, STZ is the ticker symbol, off over 10% or $18 and change. Equinix down 12 and change, that's off 3%. Sage Therapeutics down nearly 9%, that's $11. So we've got plenty to take a look at. I want to pick up where we left off yesterday because I didn't get to everything. I didn't get to one thing that came in by email, and that was for Brent in Martinez, California. He wanted some help taking a look at the Seiko mines out here, and we were able to throw this chart up on the screen. This chart here, meaning we looked at the daily, the weekly, and the monthly profile levels out here. And what we saw on the daily was price was above resistance, the top of its box, 54 cents. Trading within the box on the weekly time frame, suggesting that price might want to go target the 76 level. But just as we were going off of the air, we said, but what price needs to do, TGB is a ticker symbol, it's got to get above this little green dash line. That's about 66 cents out here. That's that Tom DeMark setup trend line. We did a workshop last night, turned everybody on to this extraordinarily powerful tool, the easiest tool that I could teach anyone how to use. So if you'd like to get that, you can still do that. Sign up for Mastering Probability. So Brent, and then that workshop will be archived. It is archived. It's on your members page. So Brent, price needs to close above 66 cents. You're at 64 cents. Does it matter? 2 pennies? Really? You're going to tell me 2 pennies matters? Yeah, it matters. Because it would be closing below an identified level of resistance, meaning Seiko Mines has just had that little bounce to resistance out here. Now, support happens to be Stevie's red line at 52 cents. If price can close over 66, whether it's today, whether it's tomorrow, then what we would do is we take a look at that weekly set of profiles, and that would take us up into the 76 penny level out there. And on a weekly time frame, we'll see one of those Tom DeMark setup trend lines as well, just slightly above 76 cents out there. So those are the parameters that I see when we take a look at Taseko mines out there. Sorry that you had to wait a full 24 hours. Well, 23 hours really, because we did it towards the end of the show. Now, let's go take a look at what the markets are doing here, and then we'll go take a look at what Coda. Is that who asked? Who asked out there? Someone asked. I saw it in there before. I don't know where it went to. There we go. Yeah. Oh, it was Peak. Do you want to take a look at Mosaic and the CF out there as the ticker symbols? First, let's just take a look at the markets, get a feel for what the markets are doing as we speak right now. And the question is, looks to me like we're looking at an A to B equals CD to the upside. You know, if we just start here and take a look at the Dow Diamonds, you've got the Dow Diamonds up $1.39, 3 million shares behind the move. The Dow is up 143 out here. Here's what you and I know about the Dow Diamonds. We know several things. First of all, in A to B equals CD land, we know that there was a B point, a swing point, that lasted for basically 2 days. That took place on January 2nd. Now, January 2nd swing point had volume of 5.3 million shares. It was passed on January 4th. It was passed on Friday. In other words, price closed over 234 because that price was 235.18, the close on January 4th. The volume on January 4th was 7.3 million shares. Voila, there you go, confirmed. A to B equals CD. That says you've got a price target. One price target is 243. That's your one-to-one level. Does not mean price will stop there. 1 to 1.272, 248 and change. I'm just rounding, if you will, but 248 would be the area. Now, the reason that we think that that is what's going to take place, if we look at the Dow Diamonds, you too can do this at home. One, price is back into the consolidation. The consolidation price inside the diamonds was at 233.76. So it says there's one of two possibilities. Well, maybe there's more than two possibilities, but one possibility is that break lower, when I say break lower, I mean break lower, back on December 20th, could have been a false break to the downside. I say could have, but I'm going to go with nah. But it could be. I opened my mind to it. I still say, nah, I don't think so. But that doesn't mean price can't move higher because you're now back inside the consolidation. We did that on Friday, last Friday, January 4th. So passes a B point, gets back in the consolidation out there. 2 days ago was a test. That was Monday, test of that bottom of the consolidation. Just look at the Dow Diamonds. And if you just take a look at what I'll call a secondary resistance level, and that's from the low of October 29th, that low, 241.05 to the low of December 10th out there, 239.25. You can do that. You draw the trend line. And what price has done today is doing right now, all depends on the close, it's trading above that level of resistance. So if you're asking the question, which you should be, hey, Steve-O, where's the Dow headed to? Well, we're just taking a look at the Dow Diamonds. And the answer is higher. 243.39, 248.02, 253.91. Those would be the levels that you would be looking at. Which one will it be? I don't know. But there will be a bearish reversal signal that will give us that answer. All we have to do is just watch for it. This is Steve Rhodes with TFNN.com. We get back from this breakout here. We'll go take a look at, well, there was a request to look at new TAS profiles, so we'll do that. And then we'll go take a look at Mosaic, MOS, and then CF, Consolidated Freightways. I'm just kidding. That's not what it is. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So the charts that are up on our screen right now are the daily time frames for the equity futures contract. The ES is in the left. Panel number 2 is the NQ, then the Dow, YM, and the Russell 2000. Now, it's a little bit cluttered out there. The reason that it's cluttered is because they contain the A to B equals CD pattern. So we just looked at the Dow Diamonds. And if we just simply use that ETF and take a look at volume, we've got a confirmed A to B equals CD to the upside. Remember we talked about how inside the Dow, it looks like it should target more than the 1-to-1 level out there, although it hasn't hit the 1-to-1 level. In the Dow equity futures contract, that price point is 24,528. Hello, 1965 happens to be the C to D leg out there. In any event, let's just stay tuned in here. There are no new profiles. So I know I can get it out. I just did. What we know out here, Jay, is that depending on today's close, what we know right now at 1:19 in the afternoon is that prices above the daily and prices above the weekly profile. There's no new profile that appears to be forming. Prices now, if in fact it can close above the 23,790 level, it's got the freedom to run to go ahead and make that 1-to-1, at least a 1-to-1, A to B equals CD to the upside. Depending on how it does it, depending on how long it takes, how many days, that would also help us understand whether it will do more than a 1-to-1. Maybe it's a 1-to-1.272. In either event, it is a Gartley sell pattern that could potentially be forming out there. So in essence and in summary, no resistance when we take a look at the NQ. No resistance when we take a look at the Russell 2000. She has already made the 1-to-1 A to B equals CD pattern. That was a price projection of 1434.30. It's now above that. It's above the resistance of its daily and its weekly profile. This is likely headed to 1464, 1502. This says do not be short the Russell 2000. Not right now. If we take a look at the NQ, she's got some work to do before she can get up to her 1-to-1 A to B equals CD level. That'd be 67.25. Folks, just because it gets the 1-to-1, don't start backing up the truck and selling. You need more of a strategy than just that. You can use that strategy, but you're going to do the right thing at the wrong time and just get snookered. And I don't want you to, other than if you like to play the game snooker, which is a great game on a long pool table with smaller balls out there. A lot of fun, especially if you have some innocent gun just kind of hanging around out there. Now, I know I'm talking a foreign language, just like probably the A to B equals CD pattern and the TAS market profiles. But in the case of the NQ, and to keep you on your toes specifically, it's got resistance that it's trading into right now. And that is the top of the weekly profile. That's at 60, what was it? Let me give you the right number out here. That's at 66.29 and change. But you see the top of the blue, the top of the box out there, it's that blue line. That's 66.89. The NQ's at resistance, but if it's getting its P's and Q's from the Russell 2000 and the Dow Equity Futures contract, it's going to take these levels out. 1-to-1 A to B equals CD 67.25. More likely headed to 68.85. That's the message at 121. If things change in the market, which they can in a heartbeat, well, then we'll come back, and because it's our responsibility to use the latest information that the market provides to you and I. And we know that changes on a minute-by-minute basis out here. Minute by minute. We should write a song minute by minute. I think it could be a hit out there. Speaking of hits, you've got the ES Mini. In the case of the ES Mini, it's above the daily profile. It's above the weekly profile, so long as it closes the day above 25.85 and 2 ticks, 50 cents out there. If it does that, then that says the A to B equals CD pattern is alive and well. Well, it's likely alive and well, as the SPYs probably crossed the B point with volume on Friday, so it is alive and well. And the 1-to-1 inside the ES Mini is 26.44, the 1-to-1 0.272, 2,700. All of the messages that you and I are seeing right here, even though you might not like to hear it, the message is simple. It says don't be short this market. Not just yet. At least that's what Stevie sees. So, Jay, bottom line out here, no new profiles, clear sailing ahead to higher prices as we take a look at the equity futures contracts out there. So I hope that that helps you out. Let's go take a look at, well, we had a request out here. That came from Peak D. And Peak D is probably looking for some Peak Ds out here. That's my guess. I suggested that he come up with another name, a pseudo name out there called Peak G, but doesn't want any part of that. But if we do take a look at the 3 time frames out here for CF Industry Holdings, what we're going to see is that is trading at 44.99. Now, the specific question is, buy now, too early, or too late? That's the question. I believe that was the question out there. So if we take a look at it, the daily, the weekly, and the monthly time frame chart, what's the one thing that pops out at your mind if you're watching us on Tiger TV and you see this chart out here? When you look at these different time frames out here, what shows up? What shows up is that price this week, was today, by the way, hit the top of its weekly profile. Now, here's what we know about these profiles, daily, weekly, monthly, any time frame. We know that the top is resistance. At the top is where their sellers are hanging out. The bottom is support. That's where buyers are hanging out. The center, which it can be, doesn't necessarily need to be in the center, kind of a misnomer to call it the center, but you can't call it by its real name out there, like we call Peak D. Peak D would be the point of control. Point of control where both buyers and sellers believe there's fair value. But where that is in proximity to the top or the bottom out there can communicate a bunch to us. But in this case here on the weekly time frame chart, what we have is that center of the box at 43.72, right dead smack center. So I don't know if bulls or bears have the upper edge when we take a look at a weekly time frame, but it is Wednesday. It's not the end of the week. But if it were the end of the week, we'd say price has found resistance and it likely is to pull back. Couldn't clear it. Could be a different story on Friday. Would I buy it now, knowing that it hit resistance and it failed? Probably not. No, let me restate that. No, I wouldn't. What we'd be looking for out here is where could this thing pull back to? And voila, we'd have to say maybe it could pull back to the center of the box around 43.72. Now, we don't have a guarantee that it's going to pull back there. In fact, it just simply may not, and it may meander higher out here. But what we don't know is whether it will or whether it won't. We know that it hit resistance out here. And it has pulled back just a tad. Resistance 46.21. You've got 45.02. If you use a wide stop, then I'd say, sure, go for it. If we look at the daily time frame, we're going to see that today is going to be day number 4 in a Tom DeMark setup, the power of 9 counts. Now, why is that important? Well, it's really not. Not until we get to day 9 or day 8 or day 10. Detente out there. If we take a look at what CF Industries did back here when it made its most recent high back on November 8th, it did it with that Tom DeMark power of 9. That was that workshop that I taught last night. If you didn't catch that workshop, you've got to ask yourself one simple question. Why? Why did you catch what perhaps is the easiest pattern to trade that most people don't pay attention to? So now you'd really have a competitive edge to be able to understand what a market is or isn't doing out here. So look, we know it hit resistance peak on a weekly time frame out here. It's probably targeting this little green dash line out here at 52.39. Do you buy retracement if you can get that? Sure. Is that retracement 42.27, 42.84, 43.72? Could be. Could be. I don't know. Maybe you're looking at this thing for long-term holding, and you can use an extra wide stop and just have fewer shares. That's a possibility. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, welcome back, folks. Let's go take a look at Mosaic. Mosaic trading out at 31.62. And same question out here, a much different looking chart. And when I say a much different looking chart out here, here's what we know, Peak, that today what Mosaic has done is it is trading above. Looks like yesterday was right on it, but today right across, right above the top of its profile. Now, Peak, if you're interested in God, what the heck did I just do on this other screen? No wonder my system was kind of frozen there. I don't even know what I did there. Weird, crazy. Sorry, it's pulling up stuff that, good Lord. I got to delete that chart. Okay, but let me get back to this. Sorry, that's a problem when you multitask and something pops up and you look at it and you're like, what? That's exactly what I said inside my head. And then, of course, I've just said that outside my head. But here's the deal. If you're okay with buying a breakout, and on a daily basis, just for the heck of it, let's just see where we're at with regard to the wave count out here. I don't know, what peak are we at when we go take peak? Only peak B. Only peak B, peak D out there. Now, you might not have caught the B, D out there, but that's what I was saying. So what's nice about this is I would say, yeah, go ahead and you could buy this one from a breakout standpoint. You're only in wave count number 2. You like wave count number 4. You're probably going to get wave count number 4 out there. And because today it is trading above resistance. Now, it's not just resistance. It's like Superwoman or Superman resistance out there. Now, the reason that we say that, remember we just talked about, you got a top of a box where there's sellers, a bottom where there's buyers, and a point of control, often referred to as the center of the box, but proximity is power. In this case here, that proximity or the center of the box or the point of control, much closer to the top. Now, what you and I like to call that is a good old-fashioned bearish structured profile, which means that sellers should have been in control of this box area, the entire box, from 31.32 to 30.56 all the way down to 27.90. However, price is now trading above resistance. So the cavalry has failed. The bulls have been able to overcome resistance at 31.32. This says that it should move to higher price. Now, your danger here with regard to Mosaic is that it has this downdraft. This downdraft that began on December 12th. You're never always going to get a perfect scenario, although sometimes you get a perfect scenario. This is not a perfect scenario, but it's a scenario. 9.8 million shares to the downside. Today, you're up with 1.2 million shares. The question you have to ask yourself is, if you were the person that bought Mosaic on the trading session of December 12th, because you thought that was a good buy, and you said that when it was trading at 32.49, only to find out that good buy meant goodbye. It was headed down to the price point of 27.52. Now, what deal would you have made with the trading gods at that stage? Would the deal you have made, please, trading gods, just get me back to break even and I'm going to go ahead and cash out? That could have been it. And if it is, then what you're running into is a bit of those traders, so you might have a little bit of agitation. I'm going to go like this. You're only in the second wave. You're now above resistance. So this is a buy signal to you as I take a look at it on its daily time frame chart. Just recognize there's a little bit of resistance you've got from all those folks from that gap to the downside. The other thing that kind of shows up here is you've got a brand new box that formed this week, but it's well above price. Sometimes that's bearish in nature, but it doesn't really get bearish until resistance gets tested. And resistance would be the bottom of the box, 33.41, you're 31.57. So kind of use that as your gauge to your reward risk. But I like the way Mosaic looks out here versus knowing that CF hit resistance and failed today. Long-winded. It's the only kind of wind that I've got out there, and I hope that helps to answer your question. Let's go to a couple of emails that came in here. And first one coming in from Tom G. Tom G writes, good afternoon, Steve. Good afternoon, Tom. I'm long JNUG from 954 yesterday, trading off of the GDXJ. Can you give me your thoughts here? And also maybe the Fed decision today from your crystal ball. Haha. Yeah. So you're asking me about the gold miners out here. I mean, we can take a look at it. I know you're looking at the GDXJ, the juniors out here, and we can do that. I'm just looking around on my charts. I thought I had something. It must be on a different screen. Just means we're going to have to go ahead and draw it in. And let's do that here on this chart. So let's take a look at the junior nugget, JNUG. Oh, you're using GDXJ. So let's go ahead and type in GDXJ. Let's see what pops up on Stevie's screen out here. And what pops up on Stevie's screen is really like what we would see at the GDX. And that is, let me just put the GDX, because maybe the chart is just a tad different. Give me out here, yeah. So the GDX is a tad different, but I want to go ahead and bring this up to you, Tom, since you've asked. And in the case of the GDX, I don't know if this will work. Well, in the case of the GDX, let me just show you by A to B equals CD terms. There was an A point down here when it made that Rhodes momentum indicator signal, that little morning star back on September 12th and 13th. And we have an A to B leg. Your A leg from that point all the way up to the high on the trading day of October 24th makes a retracement, the kind of retracement that you like to see, about a 0.618, the exact number, 69.7%. Now, in the case of the GDX, it made a perfect. Did I say perfect? I mean perfect. A to B equals CD. But the difference here versus the difference that we looked at inside the Russell 2000 is that when it formed the one-to-one level, what did it do? Big old key reversal session. Did I say big old? I mean big old key reversal session, December the 20th. And it was a bearish engulfing, a bearish sash. It was the whole 9 yards. Now, price has not been able to take that out. And I know you are long the junior nugget out there. But I'm just taking a look at the larger miners out here. And just a few days ago, as price tried to take on that area one more time, January the 8th, you had the bears show up again, a bearish engulfing. Now, what this is telling you is you really are at resistance, just using patterns and using Japanese candlestick charting techniques out here. The GDX, which is a clearer chart, has a clear Gartley sell pattern. And not until it clears the high, which we'd have to say, I would use the high from December the 20th out there. You're not out of the woods. You want to see that high get taken out. I'm trying to get you what that number is, but my system is not cooperating. I know how to make it cooperate. What I do is I just switch systems out here. I say, okay, I'm just going to make it jealous, a little jealous. So in the GDX specifically, you're looking for that to be able to clear 2147. 2147 is the high from December the 19th out there. Now look, on GDXJ, I don't know if it made the same pattern. It was an easier pattern to see, much easier pattern to see. It's not the same pattern at all out here. But to answer your question on the GDXJ, on a daily basis, a daily chart, you've got a brand new profile that formed out here. You're in junior nugget, but you're trading off of GDXJ. 3159 is the price level, Tom. You want to see price clear for that to move higher. I think there's some potential trouble out here. I could be wrong. I'm often wrong. But I think you've got to be careful in the mining equities right now. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. And to finish off the thought there with regard to Tom and the miners, even though he's looking at the junior miners out here, you know, you've got gold trading up, what, $5 or $6 today? So what? Because it's only trading up in U.S. dollars. If we take a look at gold priced in euros, it's trading lower. So in other words, you have sellers over in Europe, you've got buyers in the U.S. It basically doesn't go anywhere. The only way it goes somewhere is when it rises in all currencies. If you take a look at yen, it's a push today, okay, because it's basically trading sideways. And if you take a look at what it's doing inside of pound sterling, it too was just sideways out here. So you're not getting the enthusiasm. Don't get too caught up in the fact that gold is trading up $5 or $6 and somehow you need to jump on that train out there. And the reason being is if we take a look at gold specifically, which we'll specifically do. And by the way, I'm neutral with regard to gold. So I'm neutral with regard to what is its next move going to be. Neutral means just kind of step aside. Why? Why? Well, the reason is because of that Gartley sell pattern that took place on that trading session. Here, when we take a look at gold versus the GDX, you see on the trading day of January 4th. So different days, but now we've got the same types of signals in place for Goldilocks as well as the mining equities out there. Now, look, if you're a believer, you know, in the A to B equals CD pattern, or you believe in the Gartley buyers sell pattern, well, guess what? We got the Gartley sell pattern inside of Goldilocks, and we do inside the miners. It just means you've got to be careful. Now, inside of gold, we haven't seen the gold contract, we haven't seen any levels of support broken. So you got the bearish reversal signal. So if price closes over 1302.63, then you got to move away from neutral and say, okay, the bulls were able to battle the bears here, you know, like a football game or what have you. Anybody, as long as you know how to ice the kicker, can battle the bears. You kind of know what I mean there. So you've got some sellish type signals out here, and I say, just be careful. I'm neutral. Why am I neutral? Support has not been broken. What's support inside gold? 1272 out there. And until we see what happens, if gold gets down there and then what happens, I like the neutral position out there. But look, best of luck with the trade. I did not want you thinking that Steve-O was pulling something out of you know where in providing you with information. It has to be well thought out. Otherwise, I'm not going to give it to you. It's really just that simple. Okay, so Tarpon 2 wanted to take a look at X out here, X as U.S. Steel. And the question was, I believe, is it time for a short? No. And we're going to answer that question with just by taking a look at one simple chart out here, Tarpon. And that is the chart of the daily time frame, which shows that price is above the top of its bearish structured market profile. You're seeing it on your screen. Left-hand panel, bottom side, center of that box, 1974, much closer to the top at 2050 versus the bottom at 1784. So price has gotten over a significant level of resistance. This would say to me that U.S. Steel, just in market profile terminology interpretation alone, says that we now default to the weekly time frame and say, where's resistance here? 2148, 2257. The weekly is also a bearish structured box out here. Looks to me like what U.S. Steel wants to do is trade to higher price. I would change my mind if price gets back inside the box, close below 2050. But do I think now is the time to go ahead and take a short in U.S. Steel? And I'm assuming you were just referring to a short for a short period of time. My answer has to be no. Otherwise, I have to say everything that I have communicated in this last 46 minutes with regard to profiles is meaningless. And what we know is it's meaningful, not meaningless. So right now, I don't see it. It doesn't mean it can't be wrong. I just don't see it, and I hope that helps you out. Let's go to HD out here, hot dog. And HD wants to take a look. What do you think of target and low from a long standpoint? Let's do the same thing. Let's just go. TGT is the ticker symbol for target. Now, in the case of target, beautiful. In the fact that they look at that wide-ranging bar as it crossed resistance. That also was a bearish structured box out there. So this is kind of cool, Tarpon, because we can look at this and say, you know, I kind of get what Steve is saying. You close over a significant level of resistance, which would have been blind to everybody else who wasn't using these TAS market profiles, because you wouldn't have known that. I wouldn't have known that prior to using these things. I use them because, man, they are meaningful in interpreting what the market is doing. So now price is up above that. The question is, where is price headed to? Well, it's pretty easy in the case of target. In the case of target, it's headed towards its gap. Its gap out there, as soon as we can find the right tool, you just got to hit the right button. If you don't hit the right button, I guarantee you're just not going to get the right answer. Well, now it says apogee. That's because, I was marking that pivot point earlier this morning, but we don't want that. We just want a yellow line out here. So, you're asking, should you go long right now? Here's what I can share with you. I don't know if 72.64 is going to hold as resistance. It hasn't been tested. It is, in essence, the bottom of the gap. It's a logical area. Is it worth the reward risk at 70.57 to pick up at? It probably isn't. And perhaps price is going to spike 72.64 because the top of that weekly profile is 73.72. So this one is a tough one. Is a more difficult one. It was a better buy. I'm just trying to get this up on my screen. See, yeah. So it was a better buy if we were using the Rhodes momentum indicator signal. You see, there was a signal down at the bottom inside of target. And it was as price was moving lower, doing less relative energy. And then finally, on the trading day of December 26th, like much of the market, price closed over with conviction, Stevie's red line. In essence, that was your buy, or it was the next day when price pulled back to test Stevie's red line intraday, and then it's taken up. The other thing now that we put this chart up here, and I am glad, HD, that you asked me to do this, because now what we can see is yesterday was a Tom DeMark setup 9 count. And what we know is when that 9th count occurs, you can see one of 3 things take place. And one of those 3 things can be a change in trend. And it either happens the day of, the day before, or the day after. Well, right now we're in day after, let alone because we also had a Tom DeMark setup buy signal count. That is a lot of words, and as a result of that, we've got that resistance line, and that's right here at the trading high of December the 4th out there. So even if this 9 count fails, you've got resistance up ahead. So I'm going to say, HD, the answer is no. You did have a buy opportunity. You didn't see it. Let's see how this plays out as price heads into the resistance level out there. Now, ticker symbol LOW. Let's go see what its pattern is. Of course, I type in LOEW, and when you do that, you get nada, zippo, zilch. We're basically at the same kind of a scenario, only different. The same kind of scenario, because we can see that that little green dash line is just ahead, right at around the 99.46 level or 97.38. That may be resistance. I don't know if it is or it isn't. It's a logical level of resistance. We would not have known that had Steve not done the workshop and started using this tool in his charting system. Why do I use this tool? Same reason I use those TAS market profiles. Because they work. It's amazing. We take a look at LOW real quickly before we go to the breakout here. Perhaps this says it's going to head to 102, 100.02 on the weekly time frame. HD, I think you're just catching these just a tad late, and you've got to see how resistance gets tested. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Phil writes in. He says, hey, Steve. Hey, Phil. He is still in the long light sweet crude trade. He's up 30%, and he's going to take some off tonight. His question is, are there any new market profiles in the current contract out here? And the answer is there isn't. Now, I like the idea of taking some profits. I especially like it because prices hit their first target of resistance, and that was a trading session. That was the high from December 17, and that's at 52.15. Now we're at 52.26. That was the Tom DeMark setup trend line, which can act as resistance. So I say can. And here's the thing, Phil. I don't know if price is going to close over it, under it, right on it. If it closes over it, the interpretation is that you now have a change in trend underway in light sweet crude. And that's why I like the idea where you say, you know what, I'm going to go ahead and pocket some of those profits. If it closes below that, well, then I can understand certainly pocketing some of those profits out there. But if it closes over it, it says that light sweet crude will run higher. No new profile on a daily basis for you to consider. But what you could consider is the weekly set of profiles. Now, the weekly set of profiles, price has gotten back inside the box out here. And when I say gotten back inside the box, I'm referring to the price level of 51.86. You don't see a center line because the center and the bottom are the same two prices. We do see that that bar is orange, means a new profile could be forming. We won't know that till Sunday or Monday out here. So we don't really have anything to go with other than what we have today. If you see light sweet crude close above 52.15, the message is that there is a confirmed change in trend signal. And until it fails, you would assume that light sweet crude will continue to rise. So I hope that helps you out. Folks, thanks so much for being here. Can't believe I just deleted that chart. No, I didn't. Stay tuned because your favorite polar bear, look, he's my favorite polar bear. He should be the world's favorite polar bear. David White. He's up next. After that, you got Tom O'Brien, 3 to 5. I'll be back with you on Terrific Thursday at 1 o'clock in the afternoon. But on Fantastic Friday, it's going to be that 8 a.m. to 9 a.m. show, so you'll have to turn in early. Or turn in at the same time, and you'll just catch the archive. Have a terrific Wednesday or a wonderful Wednesday, and we'll see you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.